Hey you guys, how's it going? Back here with another video. The last few were technical analysis trade recaps, but I actually wanted to film a psychology video today since technical analysis is important, but I do believe trading is over 90% psychology. So if you have the technical analysis but not the psychology, nothing's going to go good. So let's get right into it. So the theme of today's video is basically why you are losing every single trade you take. And for beginners, I know this is actually a common problem and it's not really talked about a lot in the trading community. Um, but for me personally, this is about a story from 2 years ago or so. I do remember when I look back at my trading journal, I was taking options trades without a setup, uh, and maybe that worked for a while. That didn't work, but you start to question why you're losing all the time. But kind of to connect with our first point, I wanted to mention here. The first point for why you're losing every single trade is you do not even know what your setup is. So bringing that back to how I was taking those options trades without even knowing what my setup was, I was trading Apple and I would just open the charts at 9:30. If Apple was kind of stale, if it wasn't moving, if it was dead, I wouldn't take a trade. But if it looked like we're getting some quick volatility or price action, I would basically gamble. Okay, it looks like it's going up. I would buy some contracts. Very quickly, I'd write it out for just like maybe 5 or 10 minutes. Maybe Apple would move up $1, but if you have options contracts, that could be a decent move. So I would just take it there. I will admit my psychology was probably pretty good, right? Because I would just listen to price action and I wouldn't try to go for a home run. I would just take a single. But to try to learn from this, that's really bad. You don't want to be in a trade with no setup no setup at all. You might as well flip a coin, and heads you go long, tails you go short. You might have better odds with that. I do know some people. I don't really look at retail concepts, but some people trade maybe when it crosses the VWAP, maybe they enter. I will say it seems like you have a setup, but actually I wouldn't call this a setup. You're just kind of using one indicator. Really, a proper setup with a decent win rate has you have a few confluences, you have context, which way the market's going to go, and you're not just trading off of one indicator. So there's a few factors into your setup. For a quick example, mine personally, I get the overall view of the market. I form a bias, so maybe I think, longs are the play for the day. So then I'm only basically looking for longs unless the market is moving a certain way to show me otherwise. And then that's the first step, right? After that, I look for a key level. So maybe there's like a 1 hour inefficiency. And then once we're in that 1 hour inefficiency, that doesn't mean it's all clear to go for longs. There's still a few more things I'm looking for. I need a fair value gap to get inverted, and then I'm also looking for some other smaller things after that inversion too, right? That I have kind of found that I need after lots of trial and error. So once you have your setup, you kind of want to collect some data as well. It's not just simple as 1, 2, 3, enter. There is going to be some refinement that goes into it. But yeah, if you're currently trading and you're doing what I used to do, maybe you're just opening your Robinhood app on your phone, pulling up a stock. Hey, it looks like it's going to go up. I'm going to go long. You don't have a stop loss. You don't have a take profit. There's no rhyme or reason for why you're entering. No key level was hit. No entry trigger was, crossed or anything. That is a recipe to lose most trades you take, and you might not even know why. You might think you're doing everything right. There's a lot of psychology that goes into it. But yeah, to sum up the first point, just make sure you have a setup. You could totally copy someone online. There's lots of setups that work, but the psychology is kind of the important factor to make it work. But before you even get into psychology, if your psychology is so messed up, you're taking trades without a setup, yeah, that is not going to work for you. But yeah, bringing that to our next point I wanted to cover here, you have no patience. So basically, if we look at the example of me trading a few years ago, you could say I maybe had no patience, right? I would open up my phone. If it looked like price was moving a certain direction, I would just join. I would get in longs, I would get in shorts, whatever way I thought we were going. But now that I'm trading with a proper setup, a high win ratio, I am not taking trades most days, or maybe one trade max, very rarely two. But it's really, taught me a lot. If you have the patience, if you have a good setup, and you know exactly what you're looking for, you're also going to need the patience to wait for that setup to present itself. So that also means ignoring anything that's not your setup. So for example, say your setup has like three criteria to enter. You might see the first two a lot, but if you don't see that third one and it's clean, there's no entry. Like, why would you enter? You're just going to mess up your winning ratio. It's going to throw off your statistic, and you might have a lot more losses than you'd expect. Really, these setups, they have rules for a reason. Everything usually needs to be present to enter. Once you get more experienced, I know there's like a bit of intuition. You could kind of read the market a bit more. But basically, if you're at the level where you're worrying, why am I losing every single trade, then you can't trust your market intuition at all. You need to be totally mechanical and follow a setup to a T and collect data from that setup. And maybe after you've taken 100 trades, you'll also find a few common factors that you could kind of add to your setup to refine it. But yeah, I just really can't stress the importance of being patient. Taking a bad trade is way worse than not taking a trade. Now, being too selective and never entering, like hesitating on everything, is always not good. That is almost another psychological issue in trading, hesitation. You do need to be able to pull the trigger when it is time to pull the trigger. Hopefully you can train this muscle as you take your trades, but that is a more advanced problem. The more common problem with beginners is they're too trigger happy. They're taking everything. If it kind of looks like they're set up, I didn't have my entry trigger, but I haven't seen a trade in 2 days. I'm just going to take this. So if you haven't seen a trade in 2 days, that is not a reason to take a bad setup, right? You need to be patient. You can't force the market to do anything. Your job as a trader is to just wait and wait for your setup. And if it presents itself and all your entry criteria are present, you take the trade, and you're not really responsible for what happens after that. You're responsible for managing the trade. Your stop loss should be in the right spot. Your take profit should be in the right spot. You don't, over leverage. All of these things, we're responsible for, but we are not responsible for the price action after we get in a trade. Anything could happen, right? A bank could just place a huge short order right after you entered longs, and they could kind of move the price. We can't. So yeah, there's a lot of factors that go into it. The price is kind of random, but usually, if you have a good setup, the odds are slightly in your favor as long as you have the patience to execute your setup pretty much perfectly. But yeah, hopefully my point about patience came across well and everyone understands that. So let's get right into the next point. It's kind of 2 points in one, but you are too greedy and or you cannot accept the risk. So these kind of go hand in hand, I think. So let's talk about the greed first. A lot of traders who get into trading, maybe this will illustrate my point better. Say they were going to take a long here, right? They might put a very small stop loss and a very big target, right? This is, if you put your TP right here, that's nearly a 6-to-1, right? And this might make a lot of sense. This might be what you see on YouTube a lot. They're talking, take as small as possible stop loss and, really get that take profit up there. The problem with these is this does not hit a lot. The probabilities of these playing out are just very low statistically, given the R2R. And that might work for some people because the stop loss is so small, you could handle it psychologically, right? The small losses don't affect you that much, and then the big wins make up for it. I am not saying do not do one of these like 3-to-1 strategies. I will note though, for me personally as a beginner, the higher win ratio, lower RR, is a lot better on my psychology. I was doing pretty well though with one strategy that was like 3-to-1 RR, but the losing streaks would really kind of get me psychologically. I couldn't handle like a 5-trade losing streak, even though the wins would kind of make it up. It just wasn't for me. I can't have the big losing streaks, and I think a lot of beginners would agree. A 1-to-1, it's a lot better to start with a 1-to-1. But then going into the can't accept the risk part, as opposed to being too greedy. When you're trading a 1-to-1, the risk is going to look a lot bigger, right? Look at that. The risk is just as much as the possible reward, as opposed to that 6-to-1 we were looking at with a very small stop loss and a big target. These are a lot easier to hit. It's a lot easier to go for a 1-to-1. And I'm not saying I would take this trade right here. By the way, I have this long position out just as an example to show the RR. And you often need the stop loss at a 1-to-1 or in the proper spot, usually a swing low or swing high. You have to have your stop loss where the trade would be invalidated, not where it's too much money, right? So if it's 50 points on the NASDAQ and you're just like, I don't want to lose more than 50 points because that is too much money, and you put your stop loss at 50 points, but really it should be at the swing low, which is at 80 points, you're going to mess up your win rate because sometimes trades need a lot of room to breathe, right? If this was, I don't know what this trade is, but if this was my entry, it could totally, come down to here and then go all the way up to my target, right? Trades move, they don't always go straight up, but you need to give them room to breathe. Sometimes, and sometimes room to breathe would look more, like this. It would look like this as long as that was this was a proper spot. And forgive me, this is not a good example or a setup I would take. This is just random price action. I just have the charts open to what they currently look like, but I'm just trying to show the R2R. It's not always 1-to-1, depending on the price action and the structure of the market at the time. It could be slightly better than 1-to-1, but it's important to have that stop loss where it needs to be, as well as the take profit, right? You cannot just put your take profit at 50 points because that's how much money you want to make. You do need to identify a point on the chart that makes sense for price to go to. That could be a high within a gap. That could just be if you're trading on the 5-minute, that could be a 15-minute high, a 5-minute high. Maybe there's relative equal highs, so you do need to know some key levels for what you're targeting. But yeah, so you cannot be too greedy and go for these crazy RR trades, these YOLO shots. If you're losing every single trade, basically, just get it to a 1-to-1. It might not seem like a lot. You might think I might be able to take way more out of the markets, and you might take these 1-to-1s and win, and the price goes way past your target. That's something to worry about later. It might do that, but at least you can get your piece of the pie and take something out of the market, and you got to be happy with that and take another trade another day, and it starts to add up slowly but surely, right? So basically, to summarize that point, don't go for home runs. You should kind of go for a single, but you also need to give the trade breathing room and kind of accept some risk, right? You can't go for trades that are no risk, high reward, right? It's always kind of for a 1-to-1s, equal risk, equal reward. But the setup tilts the probabilities in your favor. So if you're doing everything right, it should work out for you. But yeah, and just to go into my last point, which is probably the most psychological point I'm talking about, and you really have to think about this one, but you cannot stay calm under pressure. So I'm going to say that again. You cannot stay calm under pressure, and that's why you're losing basically every trade. You might think you're calm and get into the markets and say, I'm going to leave my emotions, at the door. I have nerves of steel. I'm a tough guy. I'm not emotional. But even if you're sitting there looking super tough with your arms crossed, you might actually be super emotional. Like, are your hands sweating? Are you getting tunnel vision? Is there sweat dripping down your forehead? Are you breathing weird? These are all signs you are not calm under pressure, and you are kind of freaking out, even though you might not know it. And I also did not realize this was happening to me until I discovered a gentleman on YouTube called Randy Howe. I would really recommend you check him out. He does go into a lot of this psychology a lot of other traders don't talk about. And it's also kind of biology. It's not psychology, right? So you think you're being exposed to a huge risk, even if you don't think so. Your subconscious mind thinks when you put money into the markets, you are basically risking your life. It doesn't know what money is. But yeah, if you're sweating, you're breathing weird, what's going to happen is there's going to be errors such as you place a buy for a sell, right? Everything up until that point with kind of forming your strategy goes out the window if you can't even enter a long correctly and you accidentally enter a short, right? Or you might be so tunnel visioned, you accidentally take 3 contracts on NQ instead of MNQ, right? You're going to blow your whole account. You might have a rule that you never exit a trade early unless stop loss or take profit is hit. But if you can't stay calm under pressure, you might talk yourself into exiting the trade early when it's only up 50%, right? This might seem like a good idea because you're taking some profits, but that's also going to mess up your statistic in the long term, right? If you're hitting full stop loss, but you only take profit at 50%. So this is kind of something you need to become more self-aware about. I know it kind of sounds like woo-woo, but you should probably, be meditating. Kind of write down exactly how you're feeling when you're taking these trades. Write down, okay, my heart is beating out of my chest, my armpits are sweating, I can't think straight, I feel like I have tunnel vision, I'm tempted to exit the trade early, I can't even look at the screen. If you can't look at the screen, that's another big one. Sometimes people recommend, you enter the trade and then have your take profit and stop loss set, and then you just close the laptop. That is good in the beginning when you know you're going to do something stupid, like exit early for no reason. But if you always have to do that, that is a big crutch, and that is kind of reinforcing the point that you cannot stay calm under pressure and you can't trust yourself. So you should be able to experience the uncertainty of being in a trade, but still perform exactly how you would need to. So that should be the goal, right? Um, I'm still working on this, right? I'm working towards the first payout on a funded account. I have traded personal accounts and been profitable on those, but I'm just documenting the journey of passing a funded account. But where I am psychologically is I can get in these trades and I notice stuff like, yeah, occasionally my hands might sweat a bit, or I start to feel a little tunnel vision, but I can be aware and bring myself back to a calm state, and I still do what I need to do. So you could train yourself to perform under pressure. But yeah, if you're doing any psychological error that is related to not staying calm, you're just going to screw yourself every time, right? Losing every single trade is a very common issue, but to win a trade, a lot of things have to go right. So I know you could flip a coin and anyone could put on a winning trade, but to consistently, win your trades, a lot of things need to go right. Stop loss needs to be at the exact spot it needs to be. Take profit should be at the right spot. You need to read the market. Should you be long or short? Your setup has to present itself. It has to be clean. And then once you're in the trade, right, you can't control it, but also, you don't want to do anything extra you don't need to be doing, but you also have to manage the trade at the same time, right? So break even, or, price action is just kind of slow. I should probably get out of this. Something invalidated the trade, you should get out. But to sum it up, yeah, there's a lot that needs to go right. It's kind of a balancing act. But yeah, I would just, maybe more than all of these tips, I would work on practicing your ability to stay calm under pressure, and not just in trading, in every scenario in your life. So if there's any other scenario in your life that makes you kind of nervous, just try to be present and bring yourself to a calm state. Take a few deep breaths. Maybe you could come up with some sort of ritual for yourself, but this is just something you work on over the course of, multiple trades, and it takes time, right? It's something you constantly need to work on. But this is a big one. This will kind of help you prevent all those like fat fingering errors, or, anything that could go wrong that's kind of silly. You put in the order for NQ instead of MNQ, so you got like way more risk than you need, and then your account gets blown, right? If you're trying to pass an eval, that's, I don't know, $30 down the drain if it's an Apex account, right? Just because you made a dumb mistake and you blew your account. So imagine that was a funded account and you made an error like that, right? So people who are profitable aren't making these errors because, they're calm and they're double checking stuff. So yeah, to summarize, tip number 1 to not lose every trade is to know your setup, right? It cannot just be, price crossed VWAP and I'm going to enter. I mean, if this works for you, like, go ahead, but I do not know anyone who just has like a single criteria. It's always multiple criteria in addition to market context and price action. Tip number 2, which is connected to tip number 1, is you need to have patience, right? So once you know your setup, you should know exactly what you are looking for, which means you should also be able to ignore everything that is not what you are looking for. Even if you want to take a trade, there might not be a trade that day, and you have to be able to admit this, close your laptop, and come back again the next day. It's a new day, look for another trade. If something presents itself, enters. If something doesn't, don't enter. Obviously, there's some nuance to this. If you're supposed to take maybe one trade a day and you haven't seen a trade all week, you might be being a bit too selective, but I think you guys get the point. So that brings us into the third tip to summarize. You are too greedy and you can't accept the risk. So taking something that's a crazy RR 1 to 5, 1 to 6. I wouldn't recommend this for beginners. If you are just on the craziest losing streak, move that trade down to a 1 to 1, put the stop loss where it needs to be, put the take profit where it needs to be. If your setup is sound, this should really help to increase your win rate. And then the most important tip to summarize, you need to be able to stay calm under pressure. So if you're not calm, your body is going to experience things like your heart feels like it's beating out of its chest, you're sweating from your hands, your forehead, you can't sit still, you have tunnel vision, you can't talk, right? If you get really quiet, I like to actually talk out loud when I'm trading. But if you can't talk and you have tunnel vision and you're like irritable, you are not in a good state of mind to trade. So let's stay aware of this, and you could journal this and work on it through techniques such as meditation. But that is a very important thing to overcome if you want to be able to execute your setup consistently and be a profitable trader, is to stay calm under pressure. But yeah, that just about sums it up. I hope everyone enjoyed. Those aren't every psychological tip you need to win more of your trades, but these were just 4 I thought of that are very important and helped me out a lot. So yeah, I hope you guys could apply these and win some more trades. Thank you for watching. See you guys in the next video.